A few months ago, I published a video where we asked, how much will home prices gain by the end of the year? Using that headline should come with a trigger warning. We could see that home prices were inching up, but there are so many people who still think that home prices are currently falling. Even this week, we saw a press release with a home prices in free fall headline that got picked up all over the media. And so it's understandable that consumers are confused. But despite that viral bit of marketing, home prices are up almost everywhere in the country versus 2022. The median price for single family homes is up 2 to 3% over last year at this time. There are a handful of local markets where prices have not found a bottom, but in most of the country, home prices actually climbed in the last 12 months. 3% home price gains it's not that significant. You can kind of think of it as flat year over year, especially when you factor in inflation, but it is better performance than we expected for the year. Last year at this time, it looked like home prices would be down maybe 5% for 2023, but falling mortgage rates in Q1 and a surprisingly resilient economy all year motivated home buyers. So now we're looking into 2024 with the same risks as we were looking at starting this year. This week, November 14th, is our final webinar of the year where we get to look at all those risks, and we have a lot of data for how 2024 is shaping up. We'll share everything we know and speculate on the things we don't know. If you need to understand where the 2024 housing market is headed and what it has in store for us, you should join us Thursday. That's this Thursday. There's a link in the description below. These are limited to 1,000 attendees each month. We have many more than that who want to attend, but you can still reserve your spot. So click that below and save your spot. Now there's a link in the description below. We'll see you Thursday at 10 a.m. Pacific. At Altos Research, we track every home for sale in the country every week. We track all the pricing, all the supply and demand, all the changes in that data so that you can understand what's happening before you see it in the headlines. I'm Mike Simonsen. I'm the founder of Altos Research, and let's take a look at the data, the latest U.S. housing market data for the week of December 11th, 2023. The median price of single-family homes in the U.S. is now $424,900. That's down just a tiny fraction from last week, $100 down from last week. It is 2.4% higher than last year at this time. In retrospect, it is kind of a big surprise that home prices climbed this year when the total sales volume fell so dramatically. But ultimately, what happened was that while demand for homes fell, so did the number of sellers, and the market quickly found a supply-demand balance. Home prices at the peak of June did not reach last year's peak, but home prices fell more quickly in the second half of 2022, so that's why we're now showing gains over the end of last year. In this chart, you can see the dark red line is the median price for all the homes on the market. June 2022 was the record peak, but prices retreated quickly in the second half of last year. This year's spring climb and autumn decline were much less steep, so that's where we end up with home price gains. It is also notable in here is the price of the new listings. That's the bright red line in this chart. This measure tracks the cohort of homes that got listed for sale in a given week. It's a really brilliant leading indicator for the market as a whole. In aggregate, home sellers and listing agents know exactly where to price the home to find buyers. So when the bright red line is receding quickly, that's bearish for future sales prices. And what we know now is that prices for this leading indicator, the price of the new listings, continue each week to be several percent higher than last year. So home prices are holding up nationally just fine. There are two takeaways on the home prices data that we can see now in December. First, there are really no national indicators anywhere in the data that home prices are currently falling. There are none. So if you read a headline that says home prices are in free fall, you know immediately to discount the clickbait. There are some local markets, for example, Austin, Texas, or condos in San Francisco, where the data shows prices currently falling, some local markets, but nationally, it is not true. The second takeaway is the lesson I've been sharing lately, which is consumers are more sensitive to changes in mortgage rates than to the absolute levels of rates. So last year, mortgage interest rates rose by 450 basis points from 3 to 7.5%. That was a huge change in a short period, and that's when prices fell. One thing that could trigger home prices to resume falling would be another spike in mortgage rates. If rates jump over 8% in Q1, that's going to push prices lower. So while we're paying attention to home prices, the other leading indicator to track are the price reduction. So we're watching the percentage of homes on the market that have taken a price cut from the original list price. Normal markets, about a third of homes take a price cut. Right now, 38.3% of the listings, the active listings, have taken a price cut. So that's more than normal. It is a reflection of unaffordability. It's a reflection of very high rates and how quickly the rates rose in September and October this year. That change in mortgage rates, right? The change is what we care about, is at the time, it slowed the market dramatically. And so you can see the dark red line here. That's this year. See how it jumped starting basically the same day that mortgage rates started rising in September. Like that, the indicator is very precise. You can also see on this chart, the dark red line is above the normal zone. That's the gray band in the middle. That's the normal zone. We have a slower than normal market. Notice how last year's price reductions were over 42% in December. That told us very clearly that home prices the first quarter of this year would be down, that homes on the market now that don't have any offers now, they do a price cut. They get an offer in January. It closes in February, and you start hearing about that in March, or sometimes you start hearing it as late as December of that year, which we're hearing now from some headlines. Anyway, the November price cuts tell us a lot about the first quarter. We can see price cuts are dipping now, and we can watch the price cuts as we cross over into the new year. Last year, with rates trending lower at the time, it moved a lot of people off the fence. And so it put a floor on home prices, and you could see the price reductions drop quickly in Q1 of this year. That could happen again this year if we get lucky and rates keep falling. There are now 546,000 single-family homes on the market. That's 1.75% fewer than last week. Inventory is finally declining for the holidays. There are 2% more homes on the market now than last year at this time. The last few months as mortgage rates rose, inventory rose too. Rates have stabilized and inventory is falling into the new year. So we can see that inventory rises with rates rising and falls with rates falling, there is no signal of any flood of sellers. If we had a flood of sellers, that would be bearish for home prices. Too much supply implies that home prices would drop. But the fact remains that we don't have too much supply. We don't have enough supply of homes on the market. So any increase in inventory is more selection for buyers. If more, it means more sales happen, and then the market is generally healthier. So each week, all year long, the housing market has had very few sellers. There are now slightly more sellers each week with new listings than there were last year at this time. So it's still too few, but the pace of sellers is getting closer to normal for this time of year. 52,000 new listings this week, with 9,000 of those that went immediately into contract. So 43,000 new unsold listings this week. That's a little higher than last year at this time. The key lesson from the inventory chart is that slightly more inventory means slightly more home sales in 2024. As inventory starts to get generally a little bit less restrictive in 2024, we want to make sure that there is sufficient demand that it's not a sign of an impending housing market crash. If there were a flood of sellers and no buyers, that'd be pretty rough for home prices. So how do we know if there's sufficient demand for the homes that are on the market? One place to look is the immediate sales tracker. So this week, there are those 52,000 new sellers and 9,000 of which went into contract within just a few days of listing. That's not a ton of demand, of course. Affordability is obviously really difficult for so many people. But the immediate sales pace is a little stronger than last year at this time. So I interpret this as another signal that home sales volumes will increase in 2024 and that there is no downward pressure currently on home prices. In this chart, the height of each bar is the total number of sellers each week. The light portion of the bar is the immediate sales for that week. I've added the little dotted line so you can see the growth versus last year at this time. A little improvement. Over, of course, 2 years ago, we were still in the pandemic, the free money frenzy. So there were 25%, there are now 25% fewer new listings than at that time each week. Now, that was a hot market. We are many years away from that kind of market again. A few more listings, a few more sales, like that's a good thing for housing. It shows the early stages of the thawing from the frigid year we've had. And the thawing makes sense too. Consumers are now shopping for homes, knowing that mortgage rates are in the sevens. And so this stability lets people act. The stability in rates. It is no secret that home sales volumes have been in deep recession in 2023. That's why I called it frigid. 30% fewer home sales this year than in 2022. 30% fewer. I've been trying to highlight the past few weeks how the pace of home sales has now stopped declining and is about to show some recovery in 2024. This is why we will have more home sales in 2024 than 2023. This week, there were 6.4% new contracts started than the same week last year. There are still 1.3% fewer contracts pending overall than last year at this time. That's what we're showing here. So 1.3% fewer contracts pending now than last year at this time, even though this week had more new contracts started. There are 279,000 single-family homes in this contract pending stage versus 282,000 last year at this time. These are sales that will close in the near future. In this chart, the total number of single-family homes in contract, you can see, has been below low all year long. This is the dark red line showed way fewer sales. Now, though, at the right end of the chart, the two lines have converged. So it looks like we'll start 2024 with slightly more home sales in the hopper than we started this year. And keep in mind the headlines that you will hear elsewhere will still report shrinking home sales volumes for several more months because it still has to catch up with this data. But we haven't crossed over to growth yet, but the transition sure looks like it is here. If you need to help buyers and sellers see this change first, then you should join us at Altos. People need your help understanding this fast-changing market. They're reading these headlines that say home prices are in free fall, so they need to hear the actual data from you. Go to altosresearch.com, book a free consult with our team. We will help you talk about the market with your clients and your prospects today. There's a link in the description below to join us. Click that and let's get started. We'll see you at the webinar on Thursday.